Welcome to another episode of Give It a Nudge. Today we have a client of ours, a lady called Ruth from her business MoneyCatcha. Now, this is an interesting story. I think everyone is going to enjoy this. This is not your normal FinTech. This is a FinTech that's working to help the consumer get a better deal. So let's talk about how that works. Ruth, welcome to the show.
Thanks, Steve.
So we've known each other a little while now. You've been going like a rocket ship for the last, 6-7 months, and I have no idea what's happened because I haven't seen you for that time, so I'm excited to hear. But before we sort of get into more recent things, let's go back into a little bit of you, the history of the company, all that kind of stuff. So for everyone who's watching, what does MoneyCatcha do? How do you describe that?
MoneyCatcha leverages open banking data to democratise information for the consumer lending workflave.
You've got that down pat, haven't you?
I have. It's taken me some time. We actually have just re-energized our website, so we had to reword it. But yeah, we haven't always worked in the open data space because it hasn't always been as accessible or, I guess, relevant as what it is now. MoneyCatcha's, vision has always been to connect organisations with truth, and that still stands as it is today. But the mission has changed over time, and really, we originally started as a company being able to work in the B2B space for faster home loan transaction workflows from origination from end to end. We came to market in about 2016-17 when blockchain technology was trendy.
Yep,
and
trendy.
I
think it's having a comeback, by the way.
Yeah, we were. I think FinTech was, sexy, and blockchain was trendy, and that's really where we were born in that era as a company. And so we were quite successful early on with experimenting in that space around end-to-end loan origination. But the challenges we had were that was exciting from an innovation perspective, but really difficult to actually deploy into commercial adoption inside financial institutions. During that time, the consumer data right legislation was rolled out, and I think if you have to be hiding under a rock to have not noticed what's been happening with that in the last couple of months. But what we saw then was the ability to shift our technology and go really double down deep into the vertical of product and pricing offers, and making those faster and more available for consumers in this country through the origination channel that they choose to take home loans from. And prior to COVID, that was 50-60% through the bank direct from lender. Post-COVID, it's 70+% through either the broker distribution market or the consumer comparison site market, and that's really where we play now.
I find that, you've told me that stat ages ago, I remember, I'd forgotten about it. I find that stat insane, that so many people were direct to banks and now nearly everybody's completely gone the other way. What was it about COVID? Was it time that you think that gave people the opportunity to look for better things? Do you think that when it was home loans before COVID, everyone was just so caught up in their careers and trying to educate themselves? Because we saw that in terms of the recruitment, people just wanted to educate themselves for their next role. After COVID, people actually wanted to do things for themselves, their families, for the planet, all that kind of stuff. There was a mind shift. Do you think the period of time at home, rather than commuting, was when everybody started looking at their home loans going, you know what, maybe there's a better way? Do you think that's what it was? Because that's such a huge shift in a minute amount of time.
Yeah, I think there's a couple of factors. I think definitely the ability to sit at home and research was definitely you were more capable because you were online all the time, but you were confined in your house. It was really weird. You were connected but disconnected all at the same time. I think one of the other big factors is that lenders were forced to accept digital policies. So lenders didn't prioritise we've had straight-through processing for home lending. The first platform that we built got an application from submission through to settlement in 90 minutes back in 2016.
90 minutes?
90 minutes.
And I remember the last, and it was a while ago, it was weeks. It was literally weeks.
Yeah. I mean, the one that we did was a vanilla deal, and it wasn't all deals. But I guess the technology existed to allow digital straight-through processing. It just wasn't prioritised. And what COVID forced financial institutions to do is to invest and reprioritise digital engagement with consumers and their distribution channels because they couldn't go into branches.
Yeah.
And so that meant that the distribution channels had more freedom and capability to serve consumers better. And consumers had more time to make choices.
Yep.
And brokers were better set up to digitally engage with it. They had already figured out how they could digitally ID a customer over the phone, do KYC over a video call. They they were more adaptable and capable of adapting during that sort of 1 to 2 year period, depending on which state you're in, how long you were locked down for. And so the brokers just accelerated digital engagement with consumers far quicker than what the banks did. And the consumers just quickly changed their engagement behaviour.
It's almost being first to market in a very old market.
Yeah, 100%.
Interesting. And obviously now it's expanded even more. You've gone from fast home loans to a lot more, and we'll come into that. But before we do, let's find out about how you ended up here. Where's your background? What did you come from? What did you initially sort of start your career doing? I'm guessing financial services,
yeah,
right?
Absolutely. I literally had 2 roles in my life before I started this, and I had never run a technology company or a startup in my life before.
And that's why you're here today.
Yeah, maybe I'm crazy enough to still be here. But yeah, I worked for a Big 4 bank for 11 years, and during that time, I very quickly went into the mortgage and residential lending space, and I spent 9 of those 11 years either in management, business development management, or actually writing residential lending loans. And I worked in the division of the bank at the very end where they finally went into third-party banking, which is the broker distribution channel. And I was really sort of stuck in this conflict of ethics. We were writing significant volumes at the bank at the time. It was pre-Royal Commission, so there was a lot of bonuses, a lot of sort of, reward and recognition for writing good volumes.
Yep.
But there were consumers having really, really difficult hard luck stories on how long it was taking to get these applications from submission to settlement. It wasn't unusual that an application was taking 50, 60 days.
And was that because of the volume?
Volume and lack of automation on the other side, and lack of automation between the distribution channels and the actual processing centres of the banks themselves.
So were they done probably not, but were they still done in the branches, or they had a
processing centre?
Processing
centre. So each of the banks have a loans processing centre where it's all centrally housed.
And how many branches would that service, or is it regional, or is it state-based or state-based?
Yeah, and some banks actually will service multiple states. But in the bank I was in, it was just one state.
Yep.
And I got really, really sort of uncomfortable with the fact that we were not improving the experience for the consumer, but we were being rewarded and recognised for the volumes that were being written inside the bank. So I naively thought that...
Every founder's naive, don't worry.
that this bank must be the only bank that was like that. And if I went into the broking and aggregation world and invested in a broking business, then they had 40 to 50 lenders on their panel, and surely I'd be able to help consumers find a better experience on the other side. So I went into a broking business, became a partner in that business, and for another 11 years didn't satisfy my frustration in any way. All of those lenders did the same thing. And then I, again, naively thought, well, if by this stage I'd started with applications were being done by fax at the very beginning, and at the end everything we did was online, yet no one had stitched all of those online applications together. So a few things happened in my life, and I had a bit of money and a bit of advice around maybe this is how you could do it technically, and that's really how I started MoneyCatcha.
And you went for it. How cool is that? Tell me, what was that like when you... I always ask this question of founders, particularly ones who this was their first business. I know that a lot of people struggle with doing it, and then after they've done it, they find it easy. I know a lot of people find it terrifying. I know a lot of people find it empowering. What was it like for you to make that? I mean, particularly you're in quite an extreme version in terms of you've worked in a very old industry in 2 organisations, which is also quite unusual. You're not having a lot of career change happening. This was a massive career change. How did it feel, maybe before and after?
Initially liberating. So I think finally I was in control of the destiny that I was creating, kind of thing, if I'd be esoteric about it. But I felt I was finally aligned to the purpose of what I wanted to do, which was to change the experience for Australian consumers to get into their houses faster. That is always, when I reflect on it now, that had always been what I liked about banking and finance and mortgage broking. I don't like reading financials. I don't like balance sheets. Cash flow documents bore me to tears. But what I really enjoy is the experience of it helping consumers achieve the home loan dream in this country. And it was what I found really misaligned, was that I couldn't deliver that in the construct or the context of a bank or a broker. So I felt like I was empowered to be able to make a change. You don't know what you don't know when you first start a startup.
The best thing about it.
Yeah, and I think that is the reason why you are so, I guess, enthusiastic in the beginning. And I think for me, like I said before, we came to market in a time where FinTech was really sexy in this country and globally as well. It was really cool for organisations to run innovation projects. And so I think in one hand that was great because I got swept up in that level of engagement, and we were successful quite early on in a different platform that no longer exists because we weren't able to keep that going in the market. So early on, my experience was really good. It was really positive. Really, it scaled quick. Everything about a startup life. It was fast paced. It was really energetic, exciting. Everyone wanted to be your friend. We earned good money in the beginning. And then you go through, like everyone does as a founder, the falls and the crashes. And that's when you start to learn what you don't know. And I think that bit there is, the cycle of resilience that every founder goes through during a startup journey, is once you start realizing what you don't know, then you start realizing how big this task is in front of you, and you are at a really critical decision point of, am I going to put my energy and effort and other people's money into continuing this journey? And what is it going to take to do that? Or am I going to bow out at this point and say no? And it was never an option for me to bow. It was always to deliver a return to the people that have believed in me. And here we are 7.5 years later.
Interesting. Tell me, there's two things I want to pick up on there. Firstly, you seem to have always had this desire to get people into homes quicker. Where does that come from? Because that's not you don't tend to grow up going, I want to get people into homes quicker. That's not a childhood dream typically. Where do you think that's, because that seems like it was really strong right from the beginning.
Yeah, I think it's an association with what money can provide more than actually the desire of the I guess the home is, for me, I grew up in a really lovely country town, and it was all really lovely. And I think, but money was always something that was a focus. My dad was very money orientated, and I think for me, I didn't enjoy the construct around the idea of the discipline of money and budgeting and all of those things. I found really not exciting.
No one.
Oh, my dad does. But,
we'll get him on.
But what I found is that money can deliver opportunity. And what I noticed when I worked in banks was the biggest dream that you see people come in with when you're a bank teller, for example. No one is excited about handing their money over, or businesses depositing their bank, whatever. But people that are making appointments with the lender for their first home, the emotion that's attached to that is quite serious and significant. And back then, 20 odd years ago, people didn't buy houses very often in their life, maybe once or twice. We do sort of flip and change houses a bit more than what we used to in the past. So it was such a big life event. And when I started, and I was in my early 20s when I was a home loan officer and a branch manager. So I was quite young when I started seeing that experience, that emotional experience that people had as customers of our bank. And so I think that's what resonated with me, is that we could help deliver that emotional satisfaction, that experience. And it was money that was the vehicle to do that, but it wasn't actually, it wasn't the money that they wanted, it was the house they wanted. So
it was just an enabler.
Yeah, that's
Interesting that had such an impact on you. And then you talk about the resilience cycle, which every founder does go through. And I think, as a founder, I think if you are a true founder, you just keep going through it. It's never an option to stop. It never is. I think other people obviously don't necessarily do that, and everyone's built differently. But it's interesting that you actually have to go through that experience to know whether or not you can. It's kind of like they say, what would happen if there was a burning fire? Would you run in? No one knows. No. And I think it's the same thing with entrepreneurship.
I agree. And I think that it's also, it can be situational. So in my situation, I feel like I have a big obligation to the people that have come on this journey with me, whether that be that they've invested finances, time, resources, or a combination of both. My my DNA is that when people invest in me or in this case, my company, I have an obligation, and that's not in a negative way. It's I would like to deliver them a return on that investment, whether it be their time, money, or whatever. So it was never an option for me to go, oh, okay, that didn't work. You hear a lot of stories around iteration and fail fast and all of these catchphrases that's used in the startup world, but it's actually around understanding how to process failure and then change your track as quickly as possible so that you can orient yourself back onto the road to success. And that's what you learn. Do you have the capability to not be attached to that failure? Do you have the capability to detach from that and actually just keep continually focusing on the future?
Yeah, cool. Let's get back to MoneyCatcha. So what's changed? You said things have changed. Obviously, open banking has come along. I don't think everybody really understands open banking, and it's a continual process, right? And it's happened all over the world. Define open banking for me so that anyone who, I mean, I think everyone's got an idea, but I'm surprised how many people don't understand it's even happened. Yep. So maybe give us your definition of what it is and where it's at in its journey, because it's definitely not all the way through at all.
Yeah. Open banking enables consumers to make faster and a broader choice of product offers. So they can make decisions about switching or obtaining products from different providers in different industries under their control. And why that's different to how the world works today or prior outside of open banking is if you want a product from a particular provider, you can only engage with that particular product provider.
Yeah.
That product provider is not going to compare that product to other products in the market. It's not in their best interest to do that.
No.
Also, that product provider can't port your information from a competing product provider, which means you as the consumer have to be a walking data platform
Forms.
of your own information,
Yep.
and you have to repeat it. If you break it down, what open banking enables you to do, and open finance in general enables you to do, is to understand all the product offers that are available in the market in one particular place and control your choice to change product providers with a single set of data. That's the best way to describe it. And you can do all of that from the luxury of your phone or talking with one particular product provider. So in our case, we say that it democratizes data.
Yep.
And there's two critical sets of data that's important to enable that to happen in an automated way. One set of that data is the one that people mostly know about, which is your data as a consumer. So our data as consumers is all the information about our spending, our financial information, all the critical information, income, expenses, liabilities, your assets, all those kind of things which you already provide when you do an application for finance. So it's really important to understand that this data is nothing new. It's not data that you haven't provided before.
Nope.
And in fact, the ways you've provided it before typically is less safe than using the poles and wires of CDR.
Yep.
So it's a really important thing to make. The other set of data is the product data around those products that are being provided by the different providers in the market. So typically up until the CDR legislation specifically in Australia was released, product providers do not have to share information about their product and pricing policy. So when you go onto
Which is crazy.
when you go onto any platform or you're researching product information, you would only see the information that they choose to disclose, which is potentially the headline rate of a home loan.
It's marketing, it's sales, it's
That's
what
right.
it is. And by the way, just for anyone who doesn't understand, what does CDR stand for?
Oh, sorry, yeah, the consumer data rights.
Yep,
so
I just want to make sure.
The Morrison government passed a legislation when prior to the current government around being able to create a legislation that rolled out across many industries to allow open data in general. It started in the finance sector, in the banking sector. It's then gone to energy, and the intention of the legislation was to roll out across in different industry sectors. We're in that process at the moment, and the Labor government has just re-energised that legislation to take a different pathway, but at least continue to evolve. So it's great. So back to the product reference data. That's really where we play. So there are standards where that product and pricing policy information needs to be published for access to in open APIs. But if you were to take that raw data from the 105 lenders that are currently regulated under the CDR, you would only get less than 15 of those lenders that you would be able to use that data as a straight-through processing or pass-through for accurate product and pricing information. And that's not a reflection of the lenders per se. The data standards are not specific and structured enough to ensure no errors happen.
So an analogy would be like ingredients on food, for example, sugar content, salt content, that kind of stuff that, there's been a lot of talk about that. This is the same sort of thing. They've got a product and they're giving you data to the standard that they have to, but those standards are not giving you the actual accurate information, which is exactly what happens with food choice, right?
So we have built a tool that takes all of that data, applies about 13,000 rules in 7,000 lines of code.
Wow.
And now we have, on any given day, somewhere between 85 and 90 lenders that we publish products of. There's thousands of products in our master repo, and those products are the accurate product and pricing offers for all of those home loan products in the market.
And so that extracts that information and then publishes it where they don't have to.
Yeah, so we publish it to our customers. Our customers are brokers, aggregators, consumer websites, other technology platforms, and then they use that data to help the customers decide whether they have the most competitive offer in the market or
Hence
not.
like a comparison site, for example. So comparison site doesn't have to publish all that data because it would be overwhelming for anyone. But what they'll do is they'll reformat that into a digestible product that as a consumer I can look at and understand and make an actual accurate choice. That's essentially what it is.
Yep.
Yeah, how good.
Yeah.
And this is your center of truth. This is you lifting the curtain or pulling back the curtain essentially on products that sit within the financial services that are mostly incredibly complicated, right? And even if they did publish it, we wouldn't understand most of it as a consumer.
Yeah, I think understanding the policies that apply to a particular rate discount definitely requires some level of trusted advisor discussion with a consumer.
Or time.
Well. Yeah, exactly. That's why at the moment, that's why we sort of really think that the focus needs to be around the trusted advisor channel that the consumer is choosing to engage with around their home loan decisions. And we help those channels through either new product offers for customers that are deciding to get a home loan, or if those customers have got a home loan and they belong to that distribution channel, whether it be a broker or an aggregator, we recheck that home loan on a regular basis and compare it to the other products in the market. And we alert that broker or aggregator to say, hey, your customer is no longer on the most competitive offer. You should reach out to your customer because here's the top 5 offers in the market that could save them X amount of thousands of dollars a year on their home loan.
So, okay, and I get it. And your product, you sell to the business. You're a B2B model, right? So if I'm a consumer and I want to have access to your data, I have to go through another provider. How do I know if that provider is being powered by MoneyCatcha or not?
Yeah. So at the moment, we have 2 ways that we engage with let's take a broker, for example. That's a good model. 70% of consumers are using brokers, so it's quite likely that you would be going through a broker for your home loan. We work in 2 models in the broking market. One is that brokers can actually engage with us directly, and our broker would tell you that they are using Stride. That's our product in the market. So Stride Broker is the product that will actually monitor the home loan for the customer. And the customer will know that. They'll see a piece of communication that says, we're now using a piece of software called Stride, and that allows us to monitor your home loan. Please consent to share that information, and I will be looking at that inside my Stride log-on and portal. Another way where the consumer may not be as aware is that we actually are helping at the aggregator level. So brokers, individual deal with the consumer, aggregators, brokers have to belong to an aggregator for their payment system through the banks. And in that case, we are actually helping aggregators identify customers in their book that might be at risk, or we're helping those aggregators enhance and enrich their CRM platforms by actually putting Stride Broker into their CRM.
Right.
So a consumer may not know that the reason that the broker is called is because Stride Broker has prompted them to do that. But they can always ask.
Yeah,
so
they can always
ask. You can always ask your broker.
And when you say at risk, do you mean as in flight risk, as in moving to a different loan because they get sold a better deal somewhere?
Yeah, so typically the way that any organisation, whether it be a financial institution or an aggregator, will monitor their existing loan books is by sample testing. So they might just pull out 10 or 50 customers at the moment, check to see what interest rate they're on, and they'll do an outbound call or an outbound reach. They then put that customer away for the next 11 months and they look at them again in 12 months' time. So we all know now that, and especially if any of us have lived through the rate rise environment of the last 18 months, banks move their rates more than once a year.
They do.
And so it's important that you have a tool that can actually proactively check to see whether those customers are still on the most competitive rate at month 2, 3, 4, 5, 6, in between that period of time. Yeah. So what we will identify is this customer no longer is on what we think is the most competitive offer for them in the market. Here are the top 5 offers that they might actually be eligible for. Here's an outreach script that you might want to use, or here's a way that you could send them an SMS, or we give them contact options. And then from there, we say that they are at risk to the owner of that customer. Then there's 2 things that happen, and I've got 2 great examples from brokers just last week. One broker did an outreach to a customer. We got their updated information about their home loan. They were were several percent off the most competitive offer in the market. The broker was able to refinance that customer in 10 days, and that customer is now on an $18,000 reduction in their interest rate per year.
I mean, that's massive.
The second example is that a broker did exactly the same process with a different customer. The customer's difference between what rate they're on now and the most competitive rate in the market was less than a basis point. They realised that if they went through a refinance process, it was going to cost them money in the first year because of the fees. And now the customer's really comfortable that they're on the most competitive offer in the market. So those are 2 examples of retention. One where a customer goes somewhere else because there's a more competitive offer, and one is they are reassured that they are actually in the right product and lender in the market, and that broker has proactively serviced that customer for that period of time.
And we'll probably get a recommendation.
That's exactly right. But if they're, and where we actually find out about more competitive offers is not from brokers or from advertising. It's because we're at the barbecue at the neighbour's house down the road, or at our cousin's house, or whatever.
Because no one looks at the advertising.
No, and we find out our mate, our cousin, our uncle, or whatever says, I just got, I just refinanced with my broker and I'm on this, 5.99% rate or whatever.
And they rang me.
Exactly. And so then I go, well, give me your broker's name. My broker's never called me. Yeah. And so this is what we're preventing. We're intercepting those conversations. If you play the scenario from the 2 customers I just spoke about, they say, actually, I just spoke to my broker last week and we went through all of it and I'm actually on the most competitive offer and I'm fine. That's nullified. And you've saved that customer.
So you've kind of got a win for everyone. I mean, you've got a win for the customer, because they're obviously going to remain constantly being on the best rate, and they're not making stupid decisions to move and being bedazzled by advertising when fees actually cost them more. You've got a broker who's got this as a way to not just retain business, but gain more business, marketing tools in. It's great for brokers. Brokers who don't do this would be insane. And ultimately, there is a win there for the financial institution that's doing the loan, because if they are offering the best deal, people are going to find out about it who don't read it. So if they're not, well, that's their own fault. So really, it's a win for everyone across the whole thing.
And on that last point, the lenders are now getting their pricing offers distributed out to the distribution channels. So if you've got a good competitive offer, if you've got a sharp rate in the market, we're pushing that out to the distribution channel that is actually making those recommendations to the customers. So and we are agnostic. We don't have a lender panel that is paid to be on our lenders don't pay. We don't have any commercial arrangements with the lenders that we publish.
Whoever wants
if we can convert your data, then your data will be published out to all of our customers.
Amazing. And so that's such an awesome. I mean, it's an evolution over quite a long time, but that's such an awesome product.
It is.
So where are you at right now? Because it sounds like it's motoring along very nicely. So what's going on in MoneyCatcha for you right now?
Yeah, we just announced yesterday 2 new recent board appointments. So one of those is Tim Alexander, who's one of the co-founders of Judo Bank. So he has been working sort of unofficially for a little while and has officially joined our board.
That's great.
Which is great. Yeah, excellent. Bringing that. I mean, he's got a wonderful blueprint of success of scaling a financial services.
Amazing. And he's a nice guy.
Yeah,
I mean, he really
all
is.
Right. No, he's pretty good. And then more recently, we also had Laurie Tremaine join our board, who will be stepping into the chair role later this year. Laurie's background is heavily in the energy sector, and most recently was the CFO of Origin Energy and has retired. So we're his passion project in retirement, which is really exciting, and has been a shareholder of our company for a little while. So these are two great appointments. We also have another announcement which will come next month, but I'm happy to share it now, is that we have had working with us for a few months as well, and has been a technology advisor to our board over the last 12 months, is a gentleman by the name of Matthew James, who was one of the original sort of group of less than first 10 employees at VGW, which is a huge gaming company out of Perth. Matt worked in that company for several years, and the last role that he had was the CTO of that company up until he left over a year and a half ago. And Matt's been working with me to build out our engineering and delivery team as well. So we've made a couple of appointments in there, and that has allowed us to really accelerate out the master product repo, which I've talked about as our core IP piece of technology. So I guess what has been happening, we've been strengthening the board and the leadership of the company so that we have capacity to run our strategy in parallel across the different target markets that we're working in with very experienced, successful people that have done this before.
Very experienced.
Secondly, we've been building out our actual team inside the organisation from an operational level so that we can support multiple projects for deployment in each of those target markets of the aggregation and partner space, and then next year into the lender space. And thirdly, we are, as a startup company, you're always raising capital. So
always raising capital, yeah.
And if not, you're always talking about raising capital. So I'm sure there's another one of those coming around the corner soon. So for us, we just, looking at wanting to solidify what we've done in terms of our appointments, working with some great aggregator customers in the country, and also some enterprise customers in the comparison site space. Got some great partnerships in terms of the technology partners servicing the credit areas of the financial services and lending space. All of that will hopefully have some announcements coming soon, but they're all really, really great relationships with some good projects in place, and setting us up, I would imagine, for another capital raise as we move into the next phase of the growth of the business.
And how do you feel now? You are really scratching that itch that you wanted to scratch. You are, without question, getting people not just into houses quicker, but you're also making sure they're not paying unnecessary amounts of interest. So, that's a double whammy. That wasn't even in the first part of the dream.
That's right.
How do you feel now? What's it been? So it's eight odd years, which is a long time, typical overnight success, 8 to 10 years. But, you're in a point now where you're really having an impact. Obviously, there's a lot more to do. There's a lot of growth. There's a lot more opportunities. And I'm sure as the world changes, there'll be more that present themselves. But how do you feel now in this new tech founder role that you are?
Yeah, I think what's really great now is that we are actually activating change.
Yep.
So I think early on, and when we say early on, like you say, in the first 5 years for us, it was really experimenting and innovating, and the enthusiasm and excitement that comes with that because you're doing something brand new is great. But the question you always ask yourself is, am I actually affecting change? Is this really going to change? Is it going to make a material difference to the target market I'm looking for? Whereas now, with the different distribution channels that we're engaged with and the customers we're working with, and that they're at enterprise level, now I can see that there are 16,000 brokers in the market that deal with 70% of the home loan applications in this country.
Crazy. And
we're working with aggregators that represent at least 50% of that broking and aggregation number. So effectively, if you sort of extrapolate out those numbers, we could be helping 30 to 40% of consumers in this country, making sure that they're on the most effective home loan. They're the kind of numbers that excite me. And so that makes me feel like the impact could be very material, and that's quite exciting. So I think, as you say, it comes along with a whole pile of growing pains that we haven't experienced before. But for me, that just feels like opportunity.
Amazing. What a cool story.
Thanks.
I have to say I'm super impressed. There's a lot of people talk about having impact in financial services, and we know it's a difficult industry to crack because there's a lot of power and control in there. Open banking has obviously been a massive accelerator for you, but you've certainly used that data in a very clever way. You could have just taken that data and published it right publicly. That wouldn't have really had any impact. You've done it in a way that through various channels, it's impacting everybody in a positive way. So well done.
Thank you.
Well, don't even know what to say. Thank you so much for coming on. We are definitely going to have to get you back. There's no question. I want to see where you're at in a year. Is there any massive sort of change in open banking company that you think, or is there any change in terms of, will you push this to home loans? Will you push this to other financial products? Is that the sort of growth path you're thinking?
Yeah, so if you've, the recent announcements that were done last week and the legislation that was passed through Parliament means that the two things are happening next. One is that open banking is rolling out to non-bank lenders, which we've been waiting for.
Because there's a lot of them now.
There are a lot, and they are absolutely a lot. And that really broadens the scope for product and pricing offers, especially for brokers as well, because at the moment we've been only able to publish the CDR regulated lenders, which is obviously all the regulated, the 105 regulated lenders. So that's a really exciting...
Puts pressure on them too, right? To really sharpen their game.
Well, it brings competition, which is at the core of... So the whole CDR legislation was to improve choice, control and competition for the Australian consumer. And so that's exactly what this is about to do. The second thing that's rolling out, which is action initiation, which is the ability for a consumer not only to see the other product offer, but to activate the movement of that account from one product provider to another easily. And I think that will be game changing for us. That's
been a stumbling block for most people. I can't be bothered to change this too hard. I've heard that, and I've thought that myself. Same with all sorts of different, whether it be insurance, whether it be health insurance, all those kind of things.
Well, one of the most stressful things in this country is to get a home loan or change banks.
It's awful. So there's been nothing fun about that when I've ever done it. And to be able to do that across all, that's massive.
Yeah.
You're going to be busy.
And the third thing is CDR in this country has rolled out to energy already, and that's an area we haven't really explored. And then it should, if it continues to roll out in the planned market rollout, it should go across to things like telco, health insurance,
everything,
all of those other things. And I think that's really exciting from a domestic perspective. And for us, now that we know that the master product repo is very valuable in this kind of open banking environment, any of the other jurisdictions around the world where they are following a similar data model and a data standard the tech will work. Yeah, right? To attach to their rollout of open banking and open finance, they're the kind of markets that we would want to go into as well. Yeah,
your tech would just work. It would be a few tweaks here and there, but it's ready to go.
Things like language, those kind of things, and also financial services models in terms of finance and data definitions. But again, that's just sort of BA work that we would need to do in those different jurisdictions. I don't think that would be a barrier to us going.
How good. Got to chill. Well, I'm looking forward to seeing where this goes next. And I think MoneyCatcha, a very apt name when you think about what you do. Obviously, that's why it's called that. But gosh, to have impact across so many different areas. And we'll have a whole bunch of brokers who watch this show. We'll have a whole bunch of consumers who watch this show, and probably some financial services people as well. They're all thinking, wow, this is massive. So congratulations. When you do your next capital raise, we'll get you back on to talk about that, because I'm sure there's going to be a lot of people wanting to jump on this. Now you've already achieved the hard part. Right?
Yeah, excellent. Thanks, Steve. I'd love that.
Pleasure. Well, everyone, I hope you enjoyed that. What an impact she is having. And gosh, look it up. Have a look. If you're a broker, have a look. If you're a consumer, start asking your broker. Thanks for watching today. Don't forget to subscribe. We'll notch you next week.